That's right, we're going to be going in and discussing ETF fever, the piece of news that has been sweeping the cryptocurrency community like the plague. Everybody wants to get their hands on a little ETF, and word on the street is that these ETFs could seriously improve the cryptocurrency markets, and many believe that a Bitcoin ETF approved by the SEC could catalyze the next Bitcoin bull run. So what exactly is an ETF? I've seen all ETFs of all sorts, from enigmatic turtle farmers to extraterrestrial frogs and even extreme turtleneck fashion. But I'm going to tell you something, and it's going to shock you. None of these ETFs can help Bitcoin. So what will a Bitcoin ETF be? An ETF, or exchange traded fund, is a marketable security that tracks an index, a commodity like Bitcoin, or bonds, or a basket of assets like an index fund. Unlike mutual funds and ETF trades like a common stock on a stock exchange, ETFs experience price changes throughout the day as they are bought or sold. ETFs typically have a higher liquidity and lower fees than mutual funds, making them an attractive alternative for individual investors. Essentially, ETFs allow you to invest in a wide variety of things, and they're traded like traditional stocks or securities. Here's why this matters. Essentially, investing in Bitcoin right now is investing in an unregulated market, or a semi-regulated market at best. For big institutional investors like hedge funds and a lot of pension plans, think of big institutional bodies of money. They actually have a mandate that they can only invest into regulated markets. And once Bitcoin is added to an ETF, all of a sudden institutional investors can gain exposure to Bitcoin without even buying the Bitcoin itself. They can just trade it like a security or a stock. This would bring a lot of more institutional investment groups into the Bitcoin market. Beyond that, it would create a new demand for the Bitcoin itself, as primary brokers of ETFs would actually have to go buy the Bitcoin. Now, I'm sure many of you heard that the Winklevoss twins, the Winklevi, the people that almost brought you Facebook, they had their Bitcoin ETF rejected by the SEC. For a little bit of background here, the Winklevoss twins have been trying to get an ETF passed for Bitcoin since 2013. We're going to go ahead and explain why the SEC rejected that proposal, and we're also going to talk about some differences between the Winklevoss proposal and the current proposal being submitted by VanEck and Solidex that would be listed on the Chicago Board of Options and Exchanges, or the CBOE. The main reason that the SEC rejected the Winklevoss proposal, they reject the idea that Bitcoin markets are, quote, inherently resistant to manipulation. The price of the Bitcoin ETF was going to be calculated based off the Gemini exchange. Now, the Gemini exchange doesn't have the most volume in the world. It's not the biggest, most liquid exchange. And it's also operated by the Winklevoss twins, who are relatively new to the scene of both running exchanges in general and, of course, running ETFs. This would be their first ETF that was ever granted, and also the first ETF the SEC would have granted for Bitcoin in general. For those reasons, there's a large suspicion that the SEC has a bit of a prejudice against the newcomer on the block being the first one to be awarded this ETF position. Regardless, the actual official position was that the markets for Bitcoin are too susceptible to manipulation. Now, as I understand it, the BATS-BZX application, the name of the proposed rule change that the Winklevoss twins submitted, would have actually allowed for people to buy in for as little as $100 per share of the ETF. But I know for a fact that this is not the form of the next ETF application that we're going to go over from VanEck and Solidex. There was a huge silver lining in this process, as the ETF that the Winklevoss twins submitted was actually dissented upon by one of the SEC commissioners, Hester Pierce, who not only voted with her dissent within the hearing, but also published her dissent on Twitter, leading to an outpouring of affection and support from the cryptocurrency community. Especially with the promise of this one dissenting commissioner from within the SEC, we see that there is hope and certainly a silver lining to this rejection from the Winklevoss proposal, which maybe they did expect, given that they've been denied a few times before and they've been working on this now for several years. Both VanEck and Solidex have tried to submit Bitcoin ETFs in the past. However, this time they're teaming up. Now, VanEck will help market the new Bitcoin ETF, and Solidex will sponsor or create the underlying index and Bank of New York Mellon will be the custodian. Essentially, SolidX will also be providing insurance, which is going to be a whole new aspect to this proposal that hopes to provide a lot more security for the investors. VanEck and SolidX will also be listing this on the CBOE exchange, which is of course the oldest and most trusted futures and commodity exchanges in the world, with its parent company stretching back over 150 years in its history. The actual CBOE stretches back to the 70s, but the CBOT stretches back to the 1800s, the mid 1800s. This is a historical institution. Unlike some of the other proposed Bitcoin ETFs, like the Direxion application, which you just heard got delayed, was actually not fully physically backed. It's going to be leveraged on futures, which is another topic which we'll cover maybe in another video, maybe never. The point is that this particular ETF is going to be 100% physically backed, meaning that they're going to go out and buy the Bitcoin, and essentially investors into this fund are just going to be getting a proportional share of the Bitcoin ownership that the ETF represents. Moreover, instead of just allowing anyone to get into this ETF, VanEck and SolidX have structured the ETF such that the minimum single share is going to cost $200,000. That's a lot of money, and something that most likely only appeals to institutional investors or extremely high net worth individuals. Most other people, if they're interested in getting exposure to Bitcoin, would just go buy the Bitcoin. Another silver lining of the Winklevoss Bitcoin ETF rejection is that we have more understanding of what essentially the SEC is claiming for the reasons to not allow this ETF. And the more that the SEC voices officially their concerns, the more the crypto community and the investment community can actively work to assuage those concerns. For example, VanEck, one of the sponsors of the new and most promising Bitcoin ETF proposals, responded directly to Dahlia Bloss, the director of SEC's Division of Investment Management. Now, the letter goes into 5 specific points of contention that the SEC mentioned in their 92-page rebuttal, or denial rather, of the Bitcoin ETF from the Winklevosses. Namely, those are valuation, custody, arbitrage, and potential manipulation. For valuation in particular, this is kind of a moot point, as if you're trusting the CBOE to value Bitcoin for futures, then you must trust CBOE to value Bitcoin for ETFs. And that should really lay this whole conversation around valuation to rest, because if you have a problem with the way that the CBOE is valuing Bitcoin, then you shouldn't be allowing them to conduct their futures markets. Furthermore, when it comes to liquidity, the Bitcoin market is highly liquid with an average trading spread of less than 5 basis points. VanEck also makes the point that Bitcoin futures market has been efficient against the Bitcoin physical market, with the total volume of CBOE and CME coming up to $200 million. And obviously, one of the most important things to remember here is that if the SEC approves this, the amount of liquidity in the market would most certainly increase, and making it an even lesser issue. One of the other issues here was now custody. Now, as far as protecting the Bitcoin themselves, that's where this whole new concept of insurance comes in, where these Bitcoin are actually going to be insured. And for that reason, there's some protections now against hacking or stealing of the underlying asset. So that should really assuage, or at least help ameliorate, the issues around custody. And finally, the biggest concern of all, which is market manipulation. This is one of the biggest issues that was confronted with the 92-page denial for the Bitcoin ETF presented by the Winklevoss twins, was that the markets are susceptible to manipulation. There's obviously potential in these sort of fringe cases for people to exert undue force on the Bitcoin market, but moreover, the ability for the SEC to allow this and to allow for an ETF would make it so that the amount of economic force that any of these particular actors have within the market would be diminished by having much more liquidity, and many more ethical or sort of big whales that are acting ethically in a regulated way would make it so that any kind of unethical whales would have far less pull. So in essence, the market's not too manipulable, the underlying spot market's not too easily manipulated. Essentially, the SEC standing in the way of this is making the situation worse than if they were to approve this proposal. It's important to remember that there are a ton of Bitcoin ETFs being proposed, and the ones that we just went over are 2 of an increasingly large pack of proposals that are sitting on the SEC's desk. So, what will happen if the SEC does approve this proposal? Well, it would certainly create a lot of immediate demand for actual Bitcoin Bitcoin, which would need to be voiced immediately on the market. All trading of that actual asset or trading of shares in that asset would be visible on the market. So unlike these OTC brokers, which allow for off the, over the counter or off the market type trading of big amounts of Bitcoin, which is how big players have been trading Bitcoin up till now, the reality is that all of this would be publicly visible. So if people want to make big buys or big sells of Bitcoin ETF shares, well, that would show on the market and that would affect the price of Bitcoin. Unlike these over-the-counter deals, which don't really affect the price of Bitcoin because all of that trading is happening sort of off the market, this would be on the market trading, and it would allow for all of this buying and selling of Bitcoin to really affect the price. It could really mean a lot for allowing institutional money to get into Bitcoin and for that institutional money to actually push the price of Bitcoin in one direction or the other, most likely up. So what does it all mean? Well, it means that right now we're at a pivotal moment for the sort of regulatory history of Bitcoin. If this ETF proposal from VanEck and SolidX in partnership with the CBOE gets approved, well, that would mean that for the first time, institutional money would get this very regulated approach to buying Bitcoin and having it affect the price of Bitcoin as they do it. This could mean tremendous things for price action, and we all know that as price action tends to skyrocket, we can also see a corresponding interest from the public. It's pretty easy when you compare price charts and Google Trends in searches for Bitcoin that as the price skyrockets for Bitcoin, public interest also skyrockets in Bitcoin as it seems like a reliable wealth building mechanism. But what is a realistic expectation for what should happen even if this ETF is approved? Does this mean that undoubtedly Bitcoin's going to the moon, to 20,000, to 50,000, to 100,000? Well, it's hard to say, as there are some kind of ETFs and ETPs and other similar products existing in foreign markets, like in Sweden. But the reality is, it's very likely that institutional investors here in America would get their hands dirty and buy a lot more Bitcoin or have exposure to more Bitcoin than they would have before, and it's most likely going to catalyze at least a small to medium-sized bull run. Now, exactly how far that bull run will go and how it will affect the overall trajectory of Bitcoin and its history is yet to be seen. But as we went over in a previous episode, it's important to be realistic about the timing of this. A legal expert, Jake Chervinsky, explained that the SEC actually has multiple extensions that they can invoke when analyzing any rule change, which is what they need to do to change a rule to allow a new ETF. The proposal was initially submitted on June 26th, and then there was a 45-day period of observation. There can be another 45-day delay, and then another 90-day delay after that. And even after that, there can be a 60-day delay. So if you add 60 days to December 23rd, you get a final deadline of somewhere in mid-February or late February 2019 as the sort of far bounds for their observational period when analyzing to accept or reject the proposed rule change for SolidX and VanEck Bitcoin ETF proposal. So while a Bitcoin ETF looks extremely promising and what it could do to the underlying market and the price of Bitcoin is extremely exciting for all of its investors, the reality is that the SEC has put up a ton of roadblocks and addressed a lot of issues that are hopefully going to be solved with the new insured, high-priced buy-in SolidX and VanEck Bitcoin ETF to be co-sponsored by the CBOE, the largest and oldest and most trusted exchange for supporting these types of assets in the country. And absolutely, we can expect that this would have more of a chance of approval than the Winklevoss Bitcoin ETF. But again, we can't really expect that we're going to have an answer to that within this initial 45-day period when they have up to 240 days from the time of the initial proposal, which would land us sometime in late February. And again, even after that gets approved, let's say it gets approved in February, we don't know how quickly it would actually go live. So to say that we would have a Bitcoin ETF on the near horizon is pretty optimistic. Certainly too optimistic for something that I would bet on. But it does look like a Bitcoin ETF is going to get resolved, especially as there seems to be an open dialogue between the SEC and the bodies and the groups that are trying to push for this new type of ETF. So while there is hope and a light at the end of the tunnel, it might be quite a while before we actually see the benefits of a Bitcoin ETF approved by the SEC actually taking effect on the market. If you enjoyed this video and you're not already subscribed to this channel, I encourage you to hit that subscribe button and don't be afraid to click that little bell notification as we do cryptocurrency videos just like this all the time on this channel. Smash up those likes and we'll see you down in the comments. I'm Elio Trades, you're watching FUD TV, and we'll see you very, very soon on the next episode.